Now, if you're just joining us, this is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. All right, the persistent fall of the naira against the parallel market has further heightened fears of a further devaluation of the nation's currency. And furthermore, the naira has weakened in the parallel market due to the increased speculations. According to analysts, the falling external reserves and low foreign exchange inflows into Africa's biggest oil producer may be one of the reasons. Well, as of Wednesday, 18th May, the exchange rate between the naira and the US dollar closed at 419 naira 25 kobo to $1 US at the official investors and exporters window, representing about 0.18% depreciation. Similarly, the exchange rate against the US dollar depreciated by 0.33% yesterday morning, talking about Tuesday. The pair-to-pair market trading at minimum of 105 naira to the dollar compared to the previous 603 to the $1 US the previous day. All right, we have two gentlemen who will be joining us to look at this development and impact on disposable income and, of course, fixed investment space in Nigeria. First, we have Mr. Kali Woli, is an associate infrastructure and energy desk at Cardinal Stone Research. And but not the least now, Mr. Yusuf Ogubi is the head of product restructuring and origination at FX Nigeria. Thank you, gentlemen, for joining us. We appreciate your time.
Thank you for having me.
Yeah, good morning. Nice to be here again.
It's all right. Let me start with you, Mr. Ogubi. I mean, if you look at the dollar exchange at around 600 naira on Monday in the pair-to-pair market, that's the report we have. And this, of course, has heightened the fear of devaluation. Give us a sense of what you think has been happening with the Nigerian, the naira, and of course the foreign exchange market as well. What are the issues here?
Yeah, good morning. I think the issues surrounding the exchange rates, in this case, the naira to dollar exchange rate, isn't really something that is coming as a surprise to us. I think in about a few weeks or a month ago, we discussed this on this channel, and one thing we were able to part away with was that it's the likelihood of further depreciation in the currency was very high, and that's playing out now. But then I think it's important for us to note as well that the price discovery mechanism for the naira-dollar exchange rate is now shifting towards the peer-to-peer market. Increasingly, I see people reporting the peer-to-peer market in terms of naira to dollar. The I&E window obviously doesn't reflect what the everyday people pay for dollars. So it seems like the peer-to-peer market is looking like the market to watch for this naira to dollar exchange rate. But that said, there are a few technical, fundamental and subjective conditions playing out here. If you've been following the information surrounding the NNPC and the revenue accretion to the federal government, you would realize that has dropped. Virtually nothing has been accrued to the federal government over the course of the year. The bulk of it has either been channeled towards subsidy payments or any other payments due to the NNPC. And I think that increases concerns for external parties, investors that typically look at Nigeria, and they're saying that if you are not accruing anything to your federal government in terms of revenues, so where's the federal government getting money from in terms of foreign exchange to service its debt? And that played out when JP Morgan removed Nigeria from the overweight list of emerging markets bonds, right? So that's the fundamental bit of it. The subjective bit of it is playing out domestically. As Nigerians, we know next year is election year. And I think we've gone past the period where we will be speculating whether there'll be dollar moving around or not. Already it appears that dollar is moving. People are being paid dollars here and there in whatever shape or form. And that's increasing the demand for dollars. So in this case now, it appears that it's not just the businesses that need the dollars that are getting the dollars. They are looking for the dollars, or they are piling up the pressure on dollars. They feel that means piling up the pressure on dollars. So those are the two subjective and then fundamental factors that I think are driving up the exchange rates that we see currently.
Let me come to you, Mr. Kaliwole. What you think is what do you suppose is the implication of this continuous depreciation of the local currency? Perhaps what is this, if will be the effect on the common man, especially the disposable income?
Thank you for that question. I think the last speaker said a lot, about what's currently happening in the FX market. And in terms of implication, we think this will just continue to stoke additional pressures, particularly on consumer wallets. Inflation already, the last inflation that was released in April, if inflation ticked up by over 60 basis points, it's now at a 8-month high. And if you look at the breakdown, when we ran through the numbers, what we discovered was that, which basically houses anything apart from food inflation, is now at a 5-year high. And, if you break down those numbers further, you realize that, things like diesel costs, energy costs are things that are already biting consumers' wallets. Now we are talking about, depreciation of the naira. There may not be necessarily, direct impacts, but we'll likely continue.
Hello, Mr. Kali. Hello, Mr. Kali.
Yes, please.
I'm
here.
Okay. We were losing, connection with your audio earlier. I think you continue from there.
Oh. We may not necessarily direct impacts, but we'll see.
Hello, Mr. Kali. Well, I guess we probably have to, when we're able to reconnect with Mr. Kali. Well, let me get back to you, Yusuf. You talked about the domestic impact, or you were trying to give us a sense of the implication domestically here. Perhaps you need to break that down for us, and looking at what this will have, the impact, the effect this will have, especially when you look at the buying power of average Nigerian. It has to double now, of course. It has gone down, but of course, before you can even access or afford being able to buy anything in the market, then you have to double that money, because everyone wants to say dollar has increased. The exchange rate has gone up as well. Give us your perspective to these implications and the ripple effect of this crisis, forex crisis, on the Nigeria macroeconomic activities. Hello, Mr. Ogubi. I'm sure we're having issues connecting both the guests on the show.
Yeah, I can hear you now.
Okay. Did you hear my question earlier? I was trying to ask you, you've given us the fundamental angle of it, and of course the domestic perspective of this particular crisis. But I need you to give us a sense of what the impact will look like, especially earnings or incomes has not changed. Average Nigerian income remained the same. If you look at how much an average Nigerian took home last year, it's almost the same this year as well. So everyone will talk about the fact that the exchange rate has gone up, and so they have to factor that into the goods and services as well. How much of impact of this crisis are we seeing on the ordinary, livelihood for Nigeria, and of course the macroeconomic activities?
Yeah, so I look at it from two perspectives. Number one, from the expenditure perspective. So that means what you and I buy every now and then. And then from the investment perspective, because some of us still have a few naira here and there that they would like to invest in some instruments that are priced in the dollars. So for the first one, I think it's clear. It's very clear. Whether you like it or not, this impact, the pass through, the transmission mechanism is straightforward. Exchange rate ticks up, it's reflecting our inflation numbers almost directly, especially for commodities, right? And that means that the everyday person on the street would have to practically pay more for these items. If you look at it from the commodity standpoint, especially from the agricultural commodity where I sit heavily, fertilizer prices have practically doubled this year. And what that means is that by the time we are going into the harvest season, when people start selling the commodities they produce, you would see prices going up at the end of the day. And that's a straightforward mechanism. The second thing is for goods and services that we typically enjoy, for some of us that that takes goods and services from abroad. Take, for instance, people that pay for exams, people that go to school abroad, people that take some of these things abroad. Whether we like it or not, they would also have to pay more at this point in time for the item, for the services they enjoy. So it's almost inevitable. Purchasing power would go down because of this depreciation in the currency.
Okay, let me come back to you, Kaliwoli. We lost connection with you earlier. Talk to us. You were going to give us a sense of what the implications it's on the market, and of course the average Nigerian on the street as I speak to you. So talk to us what you think implications are on the market.
Sorry, I didn't get that. I didn't hear you. Please take it again.
I mean, you were relating the fact that the inflation rate has gone up, and so that again is reflected in the amount of, I beg your pardon, because the dollar has gone up, it's reflected in the inflation figures that we're seeing. So I was asking you, you were giving us your thought on this, in this line earlier. So continue on that line, but again, I need you to give us the implications of these. How do we address these issues as well?
Okay, I think the implications are clear. Purchasing power would reduce. We wouldn't probably be able to buy as much as we used to buy with the same amount of money. So with 10,000 naira, you would probably buy a little lower amount of a lesser amount of items than what you used to buy. Then that's very clear. But then in terms of solutions, right? Some analysts project that. Can you hear me?
Yes, go ahead.
Some analysts project that our import bill is quite high, and that's why we continue to see this effect on the naira. But I think it's clear now that it's not a case of our imports being high, but I think it's more of our exports not being high enough.
Mr. Yusuf, yeah, I need just let's allow Mr. Kaliwoli to come in there a bit. Kali, can you hear me? Kali?
Yes, I can.
Okay. I need you to come in with your own perspective. Please continue.
Okay. So in terms of investment, I think the last speaker has already done a lot of justice on the impact on consumers. Investments, inflation keeps ticking higher. And, investors will also be looking at, okay, what's my real return compared to other emerging markets? So we'll likely continue to see a paucity of funds coming into Nigeria, but this is not the only reason. Also, if you look at from 2020, when COVID started, when we had, crude oil price crash, basically, and we had, oil revenues. So this issue made CBN go an unorthodox way. There was a lot of queue. Foreign investors couldn't take money out of the market. So they need to, first of all, even restore confidence among the foreign investors for them to be.
Okay, I think we lost touch with Kali again. Hello, Kali. Hello, Mr. Kali.
Yeah, can you hear me?
Okay, yes, continue. Please continue on that thought.
Oh, okay, yeah. So I was just saying that we already have structural issues on ground, and investors will be looking at real rate of returns and inflation. Is at a scary. They are just taking scary new multi-year highs, and that will just further dissuade investors from coming to our and investing in our domestic assets.
Let's talk about fixed investment. How does this affect the value of fixed investment especially for individuals and institutional investors? When you look at salary earners as well, pension earners, amongst others, you can list them. The lists are endless. So are there any measures that can be taken to reduce the shocks on the fixed investment?
Okay, thank you. I think what we eventually have, or what we think can eventually somewhat soften the impact, is CBN, getting more inflows into the market, giving people more access and faster access basically for foreign exchange, particularly companies that import raw materials and they need FX access, things like that. And other things they can do basically to support the reserves is to start.
Hello, can you hear me? Oh no, I think we lost connection with Khalid again. Let me quickly bring you when we can have Khalid, and then we'll continue from that place where he stopped now. But let's bring in Yusuf Ogubi. Talk to us about the fact that the government said just to reduce the shock and the impact on the average Nigerian, they've spent about 500 billion naira talking about the social infrastructure and the impact as well, what they have done in the last 5 years in the area of social intervention and investment. I mean, shouldn't this be a cushion effect to the impact that this may have on the average Nigerian?
So, can you hear me?
Yes, I can hear you.
So I think there are a number of things that we need to put into consideration here. So social intervention programs don't replace good economic policies. They never replace good economic policies. And if we have a situation where we continue to implement social intervention programs and we don't really pay attention to good economic policies, the size of our social intervention programs will just continue to increase every now and then without achieving the results that we need to achieve. And I don't think this is rocket science, right? There's been a number of seminars, workshops, programs, white papers, policy advisory notes that have been released by various institutions, think tanks in Nigeria. So I don't think it's strange as to what should be done, right? But I think what's not very clear as what the government is implementing is the appropriate economic policies to drive our economy forward. My own opinion, the social intervention programs will continue to rise in terms of the size of the programs, and we might not actually achieve the results. Notwithstanding all the programs that we've implemented so far, people continue to fall below the poverty line. A number of households continue to face welfare problems in the country, and I think it's high time we stopped focusing on social intervention programs and rather focus on actual economic policies to solve our problems. So that's what I think.
Okay. I don't know if Kali Wali is back. Kali Wali, are you there? Mr. Kali? I think we're still... all right, when we can have him back, we'll continue from there. But, I mean, let me continue with you, Mr. Ogubi. You have talked about the fact that good policies should be what we should be looking at as well. But let's look at, in the last few years, we've seen the CBN came up with different policies, the RT 200 billion naira, which of course is supposed to address those who couldn't have access to, forex in the normal window and all of that. There are different areas that the CBN have, or schemes or initiatives that the CBN have tried to, bring up as well or initiate in recent time. I mean, do you see effect of some of these policies at all, or are you saying these are not necessary? Let me hear from you.
So the CBN has the mandate to ensure that we have a good currency in terms of the naira in this case. And then numbers don't lie, right? And it's always evident when we implement policies and we look at the numbers that come afterwards, and we are saying, so what's the effect of this policy on our economy? And I think the numbers we've seen so far have prompted us or have indicated otherwise in terms of the policies that have been promulgated by the various institutions of government. So these numbers are telling us otherwise. In my own opinion, yes, we need these policies to move forward. Probably the implementation framework isn't that solid enough. We saw, about 8 or 9 months ago, there were a lot of clamor around the inefficiencies surrounding the ports. So on the one hand, you have the CBN saying they want to drive up exports, bringing up several programs. On the other hand, you have the ports that are highly inefficient, and people spend a ridiculous number of days at the ports just to export one container or more, and they just don't match each other. So the policies have to be holistic, and at the end of the day, have to help us get the right results we want to get. Otherwise, I don't think it would work.
Okay. Do we have Kali Woli back now? Okay, but maybe we should continue with Mr. Gubi. A vast majority of financial analysts have urged the CBN to float the exchange rate market to provide clarity for investors and allow the market to be determined by the forces of demand and supply. This has been ongoing within the conversation around how to address the forex crisis in Nigeria. What's your position on this?
I think the question around devaluing the currency is a tricky question to answer. And there are a number of considerations. Yes, there's the investment economic consideration, which would typically say follow the market forces and then allow the currency to be depreciated. And there are also social consequences, which says that if you have this kind of situation, you devalue the currency, who are the people that will benefit? Those are questions that need to be answered. In my own opinion, I honestly don't have a fixed position. I think there's been a number of instances where we see that it might make a little bit of sense to have the CBN defend the currency. We also have other situations where we think that it might make a lot more sense to devalue the currency to an extent to ensure that it reflects market behavior. There are pros and cons to both decisions, and I think with the right people in position, the decisions are actually meant to be taken in the best interest of the country.
But with this reality, the last question now, how can a common man hedge against the impact of this, forex crisis we're seeing?
Oh, that's an interesting question. I think, so for me, there are a number of options, right? Investment-wise, one of the opportunities to hedge against this kind of depreciation we've seen in the currencies is commodities, right? Because there's a direct line impact between exchange rate depreciation, inflation rally, and then commodity prices, almost one-to-one based on the numbers we've seen. I think one other thing that we can also enjoy, given the kind of performance we've seen in the country so far, is the equities market, especially when you are very targeted as to the kind of equity stocks you pick and buy. Some equities have actually outperformed exchange rate depreciation this year to date. So I think both options provide you that opportunity. Right. If there's any opportunity to buy into any dollar-based instrument, so whether it's Eurobond, gold, or any other instrument that allows you to buy into dollar-based instruments, that's also another opportunity to hedge against the currency depreciation.
Okay, I think we should leave it there. Thank you so much, Yusuf Ogubi, Head of Product Restructuring and Origination at FX Nigeria. And also thank you to Kali Woli. He is an Associate Infrastructure and Energy Desk at Cardinal Stone Research. Thank you, gentlemen, for your time on Business Breakfast.